What if someone told you that everything you've ever heard about crypto, the hype, the fear, the excitement, the endless debates, is only a thin layer covering something far more profound? What if the real truth behind crypto has nothing to do with coins, charts, or overnight profits, and everything to do with people, emotions, and the timeless human desire for control, hope, and freedom? Because beneath every graph and every headline lies something deeper. Crypto isn't just technology. Crypto is a story. And people don't chase numbers, they chase possibility. The world around us is shifting at a pace that feels almost unreal. Prices climb, industries evolve, job markets wobble, and the rules we grew up with seem to fade one by one. In that uncertainty, millions of ordinary people began searching, not for a shortcut, but for a chance to build something they could hold on to, a chance to escape a system where institutions decide the limits of your opportunity, a chance to feel, maybe for the first time, that their future belonged to them. That's when crypto appeared, not as a trend, not as a game, but as a spark that quietly ignited a global shift. The problem was never crypto itself. The problem was how the world tried to explain it. For some, it was digital money. For others, a get-rich scheme. For some, the future of finance. But none of these labels captured the deeper truth. People didn't feel drawn to crypto because it was digital. They felt drawn because it represented freedom. It represented a door that had been locked for generations, finally cracking open. It represented a seat at a table many thought they would never reach. But before we go any further, one thing needs to be clear. This isn't a video trying to convince you to invest. This is a video to help you understand the story, the real, the emotional, human story behind a technology that reshaped the meaning of trust. And it's a story most people never hear because they're too busy fighting about price movements. So let's silence the noise, the hype, the memes, the fear, the influencers, the critics. Let's talk about crypto the way nobody does, but everybody should. Every major transformation in history began with a simple thought: what if we could do things differently? Crypto began with that same question. People were exhausted from watching their money shrink, exhausted from waiting days for a payment, exhausted from hidden fees, exhausted from a system that demanded trust but rarely earned it. More than anything, people were exhausted from not having control. Crypto wasn't born in a boardroom. It wasn't created by billionaires, governments, or financial giants. It was created during a global crisis by someone or some group who didn't want fame, credit, or power. Someone who simply wanted to return something the world had quietly lost: trust. But before we reach the moment of its creation, we must understand the world it was born into. For decades, financial power rested in the hands of institutions. People worked hard, saved what they could, and believed banks would protect their future. But when the system cracked, it wasn't the institutions that paid the price. It was the people. Crypto flipped that reality. It introduced a world where your money belonged to you, where transactions didn't require permission, where value could travel across the planet in seconds without borders, banks, or gatekeepers. A world where you weren't just a user, you were part of the system itself. But here's the twist. The technology has never been the most difficult part. The hardest part has always been understanding it. People fear what they don't understand, and crypto quickly became one of the most misunderstood inventions of the century. Some dismissed it, some worshipped it, some mocked it, some feared it, but the truth is far more profound. Crypto is a mirror showing us the world we live in and the world we want to build. Behind every transaction is a person looking for security, opportunity, clarity, or a new beginning. And maybe in some way, That's why you're here too. Maybe you're here to finally understand crypto without confusion, without complicated terms, without feeling lost. Maybe you're here to learn something deeper, something meaningful, something that connects emotion-led innovation. Or maybe you're simply tired of explanations that feel incomplete, artificial, or designed to impress rather than teach. So let this chapter be your reset point. Let's redefine crypto, not as hype, not as a mystery, but as a simple idea built on a powerful truth. Crypto is the digital form of an ancient human promise. I trust you because the system makes it impossible for either of us to break that trust. For the first time in history, trust doesn't come from banks, governments, or corporations. It comes from math, from transparency, from a structure that doesn't bend, doesn't lie, and doesn't depend on any single human being. And this idea changed the world forever. In the chapters ahead, you will learn where crypto came from, how it works, why some people succeed while others lose everything, and how the future will be shaped by those who truly understand it. But before we move ahead, remember one thing. Crypto is not a shortcut. Crypto is not a gamble. Crypto is not magic. Crypto is a tool, and like every powerful tool, it can build or destroy depending on the hands that hold it. By the end of this journey, you'll know how to hold it the right way. Welcome to knowledge. Welcome to understanding. Welcome to the truth behind crypto, the truth no one ever told you. Before we can understand why crypto became one of the most powerful financial revolutions in human history, we have to return to a moment that most people lived through, but very few fully understood. A moment when the world quietly realized that something was deeply, fundamentally wrong with the money we depend on every single day. Not in a dramatic explosion, not in a news headline screaming danger, but in the slow, silent cracks that appeared beneath a system people trusted their entire lives. Cracks so invisible at first that no one noticed. Cracks that grew with every crisis. Cracks that eventually revealed a painful truth. The money people worked for was not built to protect them. It was built to control them. This chapter isn't about blaming anyone. Not banks, not governments, not the millions of people caught inside a system they didn't design. This chapter is about something much more important. Understanding the truth that almost nobody teaches. The money we use today does not work the way we believe it does. It doesn't grow with us. It doesn't protect us. And worst of all, it slowly loses value while we sleep. To understand crypto, we must first understand money. Not what we think money is, but what it really is. Most people imagine money as the paper in their wallets, the digits in their bank accounts, or something backed by gold sitting in a vault. But that hasn't been true for decades. Today, money is a promise that the institutions controlling it will act responsibly, that they won't print too much of it, that they won't let it lose value, that they won't restrict access to it. And for generations, people trusted this promise blindly. But then the cracks widened. Inflation rose faster than incomes. Savings accounts earned pennies while prices doubled. The cost of living grew heavier while the value of future dreams grew smaller. People worked harder yet felt poorer. They saved diligently yet felt insecure. They invested cautiously yet felt uncertain. And the more they asked why their lives felt squeezed, the fewer real answers they received. Then came the breaking point. A financial crisis hit. Not one country, not one industry, but the entire world. Banks that people trusted collapsed overnight. Corporations that promised stability crumbled. Governments scrambled to protect entire economies. Markets fell. Businesses shut their doors. Families watched decades of savings evaporate in months. And in that chaos, for the first time in modern history, millions of ordinary people looked at the system and whispered the unthinkable. Maybe the problem isn't me. Maybe the problem is money itself. This realization didn't come with anger, it came with fear. Fear that the system guiding their financial lives was fragile. Fear that the institutions they handed their savings to were vulnerable. Fear that the very foundation of modern money was shakier than anyone admitted. And in that fear, something incredible happened. People began searching, not for shortcuts, not for miracles, but for alternatives, for fairness, for a system where the rules didn't change overnight, a system where value couldn't be printed into oblivion, a system where the rich and powerful didn't have an advantage simply because they were in the right room. People weren't looking for digital money. They were looking for honest money. And at that moment, in the darkness of a global financial meltdown, a message appeared on an obscure online forum. A message written by someone no one knew. Someone who didn't show their face, didn't chase attention, didn't claim greatness. Someone who understood the pain of the world and offered a solution without demanding credit for it. This mysterious figure introduced something new, a concept, an invention, a rebellion wrapped in mathematics. They asked a question that would echo across history. What if money no longer needed trust? What if you didn't need a bank to hold it? What if no one could freeze it? What if no government could inflate it? What if value could move freely 24/7 across the world without permission? What if every rule was written publicly, transparently, and permanently? What if money finally belonged to the people who earned it? This wasn't coding. This wasn't economics. This wasn't invention. This was liberation. And with a single block of data, the very first block, a new system was born. The system where transactions were recorded in the open. A system where no single person, no single company, and no single government had control. A system where mathematics replaced trust. A system where fairness wasn't requested, it was enforced. That moment marked the birth of crypto. Not the hype, not the speculation, not the coins flashing green and red on screens, but the idea. The idea that trust should come from truth, not authority. The idea that value should be borderless, not restricted. The idea that money should empower people, not trap them. But here's the twist almost no beginner understands. Crypto did not rise because technology advanced. Crypto rose because trust collapsed. Crypto wasn't created to replace the dollar. It was created to replace the need to trust the people controlling the dollar. Because history has shown again and again that trusting any group with absolute control over money eventually leads to the same outcome: imbalance, inequality, and instability. That's where blockchain enters the story. Not as a buzzword or a fad, but as one of humanity's most important inventions. Blockchain isn't magic. It's a truth engine, a global ledger where every transaction is recorded in a way no one can alter, manipulate, or erase. It's the opposite of secrecy. It's the opposite of corruption. It is transparency turned into technology. At first, people didn't understand. They laughed, they dismissed it, they assumed it was nonsense. But quietly, year after year, the world began to see what blockchain truly meant. For the first time ever, you could own money without needing a bank. You could send value without needing permission. You could store wealth no one could confiscate. You can participate in a global economy simply by being connected to the internet. Crypto didn't promise wealth. Crypto promised control. Control over your savings. Control over your identity. Control over your financial journey. And the most powerful part, crypto doesn't ask you to trust it. It shows you why you don't need to. This chapter matters because it gives you the foundation. To understand crypto, you must understand why it had to exist. Why millions of people felt the same frustration, the same fear, the same betrayal from a system that was supposed to protect them. why people weren't chasing profits. They were chasing fairness. Why crypto wasn't a trend. It was a response. Crypto didn't come to destroy the old world. It came to give people the voice in a new one. And as this journey continues, you'll discover that every part of crypto, from blockchains to wallets, keys to mining, wasn't invented randomly. Each component was designed with a purpose, to solve a problem the old financial world refused to fix. By the end of this series, you won't just understand how crypto works, you'll understand why the world needed it. And once you understand that, everything changes. When most beginners first hear the word blockchain, they feel intimidated. It sounds like something only tech experts, coders, or financial geniuses could understand. But the truth is beautifully different. Blockchain was never designed for the elite. It was never created for governments, corporations, or institutions that already had power. Blockchain was built for ordinary people, the very people who were left out, ignored, or silenced by the old financial system. And to understand it, you don't need complicated formulas, computer science degrees, or technical diagrams. You only need one simple question in your mind. What if there existed a system that could never lie? For decades, the world ran on one unspoken rule: trust the powerful. Trust your bank to store your savings. Trust them not to misuse your money. Trust them to send it when you ask. Trust governments not to print too much of it. Trust corporations to protect it. Trust institutions to act responsibly. But trust is fragile. It breaks quietly, without announcement, without warning. And when it breaks, it shatters everything: your savings, your plans, your dreams, your sense of security. Blockchain was created so that trust would no longer depend on human beings, but on mathematics. Let's start with a picture so simple that anyone can understand it. Imagine a giant notebook. A notebook so large it can store the financial history of the entire world. Every time someone makes a transaction, a new line is written. Every deposit, every transfer, every movement of value, written clearly. But now imagine something revolutionary. That notebook isn't stored in a bank vault, or a government office, or a corporate server. Instead, thousands, sometimes millions, of computers around the world each hold a copy of that notebook. Everyone sees the same pages, everyone sees the same numbers, everyone sees the same truth. Now imagine another rule. Once something is written in that notebook, no one, not a billionaire, not a government, not a hacker, can erase it, edit it, or secretly change it. Once it's written, it's forever, a permanent truth. That notebook is the blockchain, a chain of blocks. Each block filled with transactions, each transaction sealed through powerful mathematics, each block linked to the one before it, forming an unbreakable chain of truth. For the first time in the entire history of money, the world had a system where truth could not be manipulated, not by individuals, not by institutions, not by anyone. Why is this revolutionary? Because the old financial world runs on closed doors, hidden databases, private ledgers, systems that only insiders can see. You don't know how much money banks truly hold. You don't know what decisions will devalue your savings tomorrow. You don't know if your account could be frozen because of an error, a regulation, or a decision you never agreed to. In the old system, truth is controlled. In the blockchain system, truth is shared. Blockchain flips the world upside down. It says, no more secrets, no more silent edits, no more hidden rules. And the most beautiful part is this. Blockchain doesn't ask you to trust it. It shows you the truth. Every transaction is visible. Every block is time-stamped. Every change is validated by thousands of computers. Every attempt to cheat breaks instantly. Let's go one step deeper, not in a technical way, but in a way that connects to your intuition. Imagine each block as a page of that giant notebook. Once the page is full of transactions, it gets locked, not with a simple password, but with a mathematical puzzle so complex that even the fastest machines take time and energy to solve it. When the page is locked, it becomes history, permanent, untouchable. The next page links to it using something like a digital fingerprint, a hash. If even a tiny detail in the page changes, a number, a dot, a comma, the fingerprint changes instantly. The link breaks, the chain breaks, the entire network rejects the tampered page in a second. This is why blockchain is incorruptible. Imagine trying to secretly rewrite page 10 of a notebook that exists on 100,000 computers around the world. Imagine each computer knowing exactly what page 10 should look like. And the moment your forged page doesn't match the others, it gets rejected, instantly, automatically, without debate. That is decentralization. A system where no single person, government, corporation, or server holds power. A system where the truth comes from the many, not the few. In the traditional world, one corrupted server can cause chaos. One malicious actor can freeze accounts. One mistake can collapse banks. One hidden decision can change the value of your savings. In the blockchain world, no one holds absolute power. Truth comes from the entire network. Power is distributed. Responsibility is shared. This is the foundation that makes crypto possible. Without blockchain, crypto would be meaningless, just another digital number. With blockchain, crypto becomes digital truth. Now let's answer the question everyone asks at the beginning. Why do we even need blockchain? What problem does it solve? Blockchain solves 3 human problems humanity has faced for centuries. 1. Control. Old system, someone else holds your money. Blockchain, you hold your money. Truly, directly, personally. Transparency. Old systems, closed systems, hidden ledgers, unclear rules. Blockchain, public truth. Nothing hidden. Security. Old system, one server hack can destroy everything. Blockchain, no single point of failure. To hack blockchain, you'd have to hack the entire world. But the deepest reason blockchain matters isn't technical, it's emotional. Blockchain gives people something they lost long ago. Freedom. Not the freedom to get rich quickly, not the freedom to avoid responsibility, but the freedom to own what is theirs. The freedom to transfer value at any time to anyone without approval. The freedom to participate in a global economy without being judged, blocked, or restricted. The freedom to protect your savings from silent inflation and hidden decisions made behind closed doors. This is why people say blockchain is bigger than money, bigger than technology, bigger than crypto itself. It is a shift in power, a return of power to the people. For centuries, financial authority belonged only to the elite, only to institutions, only to those who controlled the system. Blockchain changed that forever. For the first time, ordinary people could be their own bank, their own authority, their own guardian. And once you understand this at a deep level, even emotionally, you will never look at money the same way again. Blockchain isn't perfect. It isn't magical. It isn't a miracle solution, but it is the closest humanity has ever come to building a financial system that is fair by design. This chapter is your foundation. In the next chapter, we'll go even deeper into the heart of crypto ownership, the keys that unlock your financial freedom, the thing that makes you truly in control, your crypto wallet and your private keys, the power to own your money without anyone's permission. When people hear the word crypto wallet, they often imagine an app, a device, or some complicated tool. But the truth is far deeper. Your wallet is not just a place to store digital coins. It is the gateway to financial freedom. It is the front door to your digital home. And the private keys inside it are the only keys that unlock everything you own. This chapter is not about technology. It's about power. Because in crypto, power does not come from the coin you hold. It comes from the control you have over them. For your entire life, the old financial system taught you one thing. You don't control your money. You only control the right to ask for it. Your bank could freeze your account. Your card could stop working. Your withdrawals could be delayed. Your transaction could be restricted. Your funds could be questioned. And you were expected to accept all of it. You were the owner on paper, but not in reality. Crypto changed this forever. For the first time, we created money that belongs to you, truly, completely, unquestionably, without needing permission from banks, governments, or institutions. But here's the part most beginners misunderstand. Your crypto wallet does not store your coins. Your coins never leave the blockchain. Your wallet simply stores your private keys, the ultimate proof that a certain amount of value belongs to you. Think of your private key as a master password, a secret code, a digital signature that says, "This is mine, and only I can move it." Anyone who has your private key controls your entire crypto instantly from anywhere in the world. There are no second chances, no recovery button, no forgot password, no customer support. Crypto follows one brutal rule. Whoever holds the key owns the money. This is what makes crypto both terrifying and powerful. Because for the first time, the authority is not shared, not borrowed, not supervised. It is yours. This is why understanding wallets matters for every beginner. There are two types of wallets, and the one you choose determines whether you are truly free or simply pretending to be. Custodial wallets, like the ones on crypto exchanges, are easy to use. But here's the truth. You do not control the keys. The exchange does. If they freeze withdrawals, you wait. If they get hacked, you lose. If they shut down, your funds vanish. You see the numbers, but you don't own them. You're renting them. It's the same system as banks, wrapped in new technology. But a non-custodial wallet, a self-custody wallet, is where true ownership begins. Here, you hold the keys. You control the access. You approve every transaction. No one can block you, freeze you, or restrict you. You become your own bank. This wallet can be a mobile app, a desktop app, or a hardware device like Ledger or Trezor. The format doesn't matter. What matters is that the authority belongs to you. And that authority begins with one thing: your recovery phrase. The 12 or 24 secret words that act as the master backup for your entire wallet. Those words are your private key. Anyone who gets them can drain your wallet in seconds. And that's why scammers try so hard to trick beginners. They pretend to be support, verification teams, or recovery helpers. But remember this for the rest of your life. No legitimate company, app, or person will ever ask for your private key or recovery phrase. And now comes the emotional truth, the part no one tells you. When you control your own keys, something changes inside you. You feel a level of independence you never felt before. A quiet confidence, a sense of power, a new kind of awareness. You are not asking anyone for permission. You are not relying on a system that can betray you. You are holding your financial destiny with your own hands. Crypto doesn't just change your money, it changes your mindset. Once you experience a real ownership, you can never go back to a world where your access to money depends on someone else. But this freedom comes with responsibility. In the traditional world, responsibility is outsourced. If you lose your card, the bank replaces it. If your account gets hacked, the bank refunds you. If you forget your password, customer service helps you recover it. In crypto, none of that exists. You are the bank. You are the support team. You are the security department. This requires discipline. You must protect your keys. You must recognize scams. You must learn to safeguard your identity and your value. The biggest risk in crypto is not hackers. It's mistakes made by beginners. One wrong click, one fake website, one phishing link, one screenshot of your seed phrase, and everything can disappear. This is why wallet security is not optional. It's essential. Never store your seed phrase digitally. Never enter it on websites. And always use hardware wallets for large amounts. These aren't rules. They're survival principles. Principles that transform you from a beginner into someone who owns their financial future with confidence. And now, as we close this chapter, remember one eternal truth. Not your keys, not your crypto, but your keys, your freedom. Your wallet is more than a tool. It is the symbol of a new era where ordinary people finally hold the power that institutions controlled for centuries. And now that you understand ownership, it's time to understand the next revolution, the cryptocurrencies themselves, how they work, and why they have value. Most beginners think they understand crypto until someone asks them a simple question. Why does it even have value? And suddenly everything becomes blurry. People assume crypto has value because of hype, memes, bull runs, influencers, or shocking price moves. But none of that is the real reason. The actual value of crypto begins long before charts, markets, or trends. It begins with human desire. The desire for freedom, control, speed, fairness, transparency, and independence. These desires existed for centuries. The old financial system ignored them. Crypto fulfilled them. And that fulfillment is where true value was born. Crypto brought something the world had never seen before. Scarcity that cannot be manipulated. Imagine if gold could be printed. It wouldn't feel rare, valuable, or trustworthy. It would lose its meaning. Crypto solved that by introducing mathematical scarcity, a fixed supply, controlled by code, not by human decisions or political agendas. Some coins have a hard cap. Some release tokens slowly over time. Some burn part of their supply to increase rarity. The point is simple. Scarcity creates value. And for the first time in history, scarcity cannot be changed by leaders, institutions, or governments. It is hard-coded into the system itself. But scarcity alone isn't enough. Something becomes valuable only when it is useful. Gold is valuable because it has real-world applications. Oil is valuable because it powers industries. Crypto follows the same rule. Some coins secure entire blockchains. Some act as fuel for applications. Some enable fast global payments. Some represent ownership of digital assets. Some unlock ecosystems like gaming worlds and metaverse environments. The more useful a token is, the more value it attracts. Crypto isn't just money, it's infrastructure. It's a digital economy moving without friction, without borders, without permission. Utility creates demand. Demand creates value. Now let's talk about one of the most misunderstood yet revolutionary ideas in crypto: trustless systems. For centuries, money required trust. You trusted banks to protect your savings. You trusted governments to manage your currency. You trusted middlemen to process your payments. And again, that trust was broken. Crypto removed the need for trust altogether. Instead, it replaced trust with verifiable truth, math, transparency, and open records visible to all. You don't need to trust a bank. The blockchain verifies everything automatically. No secrets, no hidden ledgers, no silent changes. In a world built on manipulation, a system built on truth is priceless. This brings us to decentralization, the backbone of crypto value. In the old system, control belongs to a handful of powerful institutions. In crypto, control is spread across thousands of computers around the world. No CEO is in charge. No government can shut it down. No server can be destroyed. No single person can rewrite the rules. Decentralization makes networks unstoppable. Prices can crash, markets can panic, regulators can complain, but the blockchain keeps running block after block without fail. That resilience, that independence is a major source of crypto's value. And then comes security. Not the security of passwords or buildings, but the security of cryptography. Crypto isn't protected by people. It's protected by math, so powerful and complex that even supercomputers would need millions of years to break it. No one can duplicate your money. No one can fake your transactions. No one can rewrite history. No one can access your funds without your private key. This creates a level of reliability and integrity the traditional system can't match. And when people trust the security, they trust the value. But perhaps the most beautiful part of crypto is the network effect. When only a few people use the internet, it wasn't valuable. When the world adopted it, everything changed. Cryptillit works the same way. Every new user increases liquidity, demand, trust, awareness, applications, and the overall strength of the network. The value doesn't grow linearly, it grows exponentially. That compounding power is why crypto keeps rising despite crashes, despite doubt, and despite criticism. Still, the deepest value of crypto is emotional, not technological. Crypto is valuable because it gives people something they've been denied for generations: independence. No bank hours, no holiday delays, no frozen accounts, no transaction limits, no permission required, no discrimination, no gatekeepers. Crypto gives instant access, borderless mobility, total control, and full ownership. That's more than finance. It's empowerment. It's identity. It's dignity. People don't buy crypto just for profits. They buy it for freedom. And freedom has value greater than any currency. So here's the truth, the real truth about crypto's value. Crypto is valuable because it is scarce, because it is useful, because it removes middlemen, because it is decentralized, because it is secure, because it grows with adoption, and because it gives ordinary people power they never had before. This combination has never existed before in human history. Crypto isn't just digital money. It's a new model of value built for a digital world, a world that moves faster than banks, more globally than governments, and more openly than traditional systems. Crypto is not perfect, but it is powerful, and it is only getting started. Now that you understand why crypto has value, it's time to explore where crypto comes from. The next chapter will take you into the heart of creation, how new coins are born, how mining really works, and how block rewards shape the entire ecosystem. Crypto feels futuristic and mysterious, but at its core, it comes from a surprisingly elegant system, one that works without CEOs, without government approval, and without a single company running the show. To truly understand this digital revolution, you must understand where crypto actually comes from, how new coins are born, and why the system stays alive even when the world doubts it. Most beginners imagine a massive computer factory printing digital coins like a money machine. But the reality is far more fascinating. Crypto is created by a living ecosystem of machines, mathematics, stakers, nodes, and global networks that never sleep. It begins with two powerful creation methods: mining, also known as proof of work, and minting, known as proof of stake. Mining is the original engine, a digital gold rush where thousands of computers across the world compete in real time to solve a mathematical puzzle. And the winner secures the next block of transactions, protects the network from attacks, and earns newly created coins as a reward. This work keeps the system honest, preventing fake payments, double spending, or fraudulent activity. Mining uses energy as security, turning raw computation into digital trust. But as technology evolved, a new system emerged: minting, or proof of stake, which doesn't require massive electricity. Instead of racing with machines, participants lock their coins, support the blockchain, validate transactions, and earn new coins simply by contributing to the network's stability. Minting is more efficient, faster, and cleaner, offering a modern alternative to the energy-heavy competition of mining. Both systems, mining and minting, create new cryptocurrency, protect the network, and keep the blockchain running without interruption. Every time a new block is created, the system releases a block reward, a predictable amount of newly generated crypto that enters circulating supply. No printing, no political decisions, no central bank. Everything is coded from day one, and this supply doesn't grow forever. Many blockchains include halving or ignition reductions, where block rewards drop over time, making new coins harder to obtain and increasing scarcity. Just like gold becoming harder to mine if you go deeper underground. Scarcity strengthens value, slows supply growth, and creates a long-term economic design that's immune to human manipulation. Mining and minting may seem complex, but they are the backbone of something simple: independence. They make crypto unstoppable because thousands of machines and stakers worldwide support it. No government can shut it down, no corporation owns it, no server controls it. Even if one country bans it, the network keeps running. Because crypto is not a local system, it's global. Everywhere, all at once. This decentralized creation process is more than technology, it's a movement. Imagine miners in Iceland, stakers in India, nodes in the US, validators in Japan, all working together without ever meeting each other, yet protecting each other's money. No leaders, no bosses, no middlemen. Just a system built on transparency, mathematics, fairness, and cooperation. That's the emotional beauty of crypto. A financial world where people, not institutions, keep the system alive. And now that you understand how crypto is created, you're ready for the next chapter, where we open the secret door to one of the biggest questions in the entire crypto universe. How do blockchains actually work? A question almost no one explains clearly, but one you're about to understand better than 99% of the internet. Every beginner looks at a crypto chart and feels lost, as if the market speaks a secret language reserved for experts, whales, and some hidden society of financial geniuses. But the truth is much simpler. Every rise and fall, every pump and crash, every candle on the chart is driven by 4 invisible forces that quietly control the entire crypto world. Forces that operate whether you understand them or not. Forces that turn chaos into a predictable system once you learn how to see them. The first force is market sentiment, the emotional heartbeat of crypto. Fear, greed, hope, uncertainty, panic, and excitement, all mixing together into a psychological storm that pushes prices up, not because technology suddenly improves, but because people believe it will. And pulls prices down, not because the project fails, but because confidence collapses. Sentiment leaves clues everywhere. Sudden hype on socials. Influencers pushing the same narrative, overly positive or overly negative headlines, and friends suddenly talking about the next Bitcoin. All signals that emotion, not logic, is in control. The second invisible force is liquidity, the amount of money available to buy or sell an asset, which determines how violently prices move. High liquidity is like a deep ocean where waves move smoothly, while low liquidity is like a shallow pool where even a small splash creates chaos. This is why tiny altcoins can pump 400% in a day and crash 80% the next. There simply isn't enough liquidity to absorb big trades. Liquidity is more important than price itself because a 10-cent coin with low liquidity is far riskier than a $20,000 asset with deep liquidity. Professionals always check liquidity first, while beginners almost never check it at all. The third force is market structure, the invisible roadmap every market follows. A repeating cycle of uptrend, consolidation, downtrend, and accumulation, a breathing pattern that cannot be stopped or cheated, only understood. Most beginners lose because they enter at the top of the excitement phase, panic sell during fear, quit during accumulation, and miss the opportunity that smart money quietly prepares for. Market structure teaches you to read the present, not predict the future, because once you know where you are in the cycle, you stop being manipulated by it. The fourth force is whales and smart money, the giants who actually move the market while staying silent. These include hedge funds, exchanges, large private investors, veteran traders, algorithms, project insiders, and liquidity providers. They don't chase pumps or panic during drops. Instead, they plan using fake pumps, stop-loss hunts, liquidity traps, and sideways periods to accumulate or unload positions while beginners react emotionally. Yet whales leave footprints, large, sudden trades, unusual volume spikes, unexpected reversals, and strange order book behavior. Signals that smart money is entering or exiting. When you learn to follow these footprints, you stop fighting the market and start moving with it. Together, these four forces form the true mechanics of crypto. Sentiment is the wind pushing the waves. Liquidity is the depth of the ocean guiding how big those waves become. Market structure is the tide, creating predictable rises and falls. And whales are the underwater currents, directing the hidden movement beneath the surface. Beginners see random waves. Professionals see a system. Most beginners lose because they focus only on price, hoping, fearing, predicting, while professionals focus on the forces behind the price: sentiment, liquidity, structure, and whale behavior. Price is the result, not the cause. Once you understand the cause, you stop being surprised by what happens and start being prepared for it. From now on, when you look at a chart, you won't ask, why is the price moving? Instead, you'll ask deeper questions. What is the crowd feeling right now? How much liquidity is actually available? What part of the cycle are we in? Are whales quietly loading up or silently exiting? These questions transform confusion into clarity, panic into awareness, and beginners into real students of the market. And the moment you become a student of the market finally begins to reveal its lessons to you. Slowly, powerfully, and unmistakably. Close your eyes and imagine a world where money moves without permission, without borders, without paperwork, without delays, and without anyone judging you based on where you live, who you are, or how much you earn. A world where your wealth belongs to you and only you. Not banks, not governments, not corporations. This world isn't science fiction. It exists right now, quietly running underneath every crypto transaction, every token swap, every NFT purchase, every decentralized app, and the invisible machine that makes all of this possible is blockchain. Most people see price charts, pumps, dumps, and hype, but almost no one understands the architecture powering everything behind the screen. The digital engine that never sleeps, never breaks, and never lies. At its core, blockchain is nothing more than a shared digital notebook. A notebook anyone can read, no one can erase, everyone keeps a copy of, and that updates itself automatically across thousands of computers around the world. This notebook records only one thing: transactions. But the revolutionary part isn't what it records, it's how it records it. The blockchain stands on three unbreakable pillars: decentralization, transparency, and immutability. Decentralization means the notebook isn't stored on a single server, but on thousands. So no government can shut it down, no corporation can censor it, and no hacker can break it by attacking one point. Transparency means every transaction is public. Wallets are anonymous, but the ledger is open, so no one can cheat, hide, manipulate, or secretly rewrite balances the way centralized systems sometimes do. Immutability means once a transaction is written, it is final. No one, not even the coin creators, can go back and change it, giving blockchain a level of integrity traditional finance has never offered. The name blockchain comes from its structure. Each block is like a page in the notebook containing new transactions, and each block is permanently linked to the block before it, forming an unbreakable chain of verified truth. To fake one block, you'd have to fake every block that came after it on thousands of computers at the same time. An impossible task. When you send crypto, your wallet signs the transaction with your private key, broadcast it to the network. Thousands of computers verify it using strict mathematical rules, and once verified, it gets added to a new block, which is then linked to the chain and instantly updated across every copy in the world. No banks, no middlemen, no waiting for business hours, just pure automated trust. But the blockchain doesn't run on its own. It needs guardians, miners in proof-of-work systems and validators in proof-of-stake systems. Miners use powerful computers to solve puzzles that prove they've done real work, securing the netlink and earning new coins as a reward, which is how Bitcoin functions. Validators, on the other hand, lock up their coins as collateral. If they behave dishonestly, they lose their stake, making cheating financially impossible. This is how modern networks like Ethereum now operate. And then comes the true breakthrough: smart contracts, the self-executing code living on blockchains that run automatically when conditions are met. These smart contracts allow money to move without banks, ownership to transfer without lawyers, and applications to run without centralized servers. They power decentralized apps, NFT marketplaces, DeFi platforms, gaming economies, tokenized real estate, identity systems, and a massive new digital economy that operates without permission or gatekeepers. Blockchain is not just crypto money. It's digital identity, global finance, automated contracts, decentralized social networks, transparent voting systems, and supply chain tracking. Crypto is just the first use case, but blockchain is the entire universe. And this universe is a direct threat to old financial systems built on control, permission, slow processes, middlemen, and endless fees. Blockchain removes all of that. It gives ordinary people financial independence, once reserved only for institutions. Transparency, ownership, accessibility, security, equality. It allows the unbanked to transact. It protects wealth from corruption. It gives everyone the same rules, regardless of their status. And the beautiful truth is this: crypto is not just a way to make money. It's a way to take control of it. Before this chapter, blockchain may have seemed complicated, even intimidating, but now you understand the blueprint. The digital notebook, the decentralized architecture, the transparent ledger, the immutable blocks, the miners and validators, the smart contracts, the unstoppable global network that keeps the system alive without needing trust in any single human being. You're no longer just a beginner staring at charts. You're part of a revolution. I've seen inside the machine. You understand why blockchain exists, why it matters, and why millions of people believe it's the future of freedom. And now, take a deep breath, because what you're about to hear is the single most important chapter of your entire crypto journey. If blockchain is the engine that keeps this digital revolution moving, and if crypto coins are the fuel that powers it, then security is the seatbelt that keeps you alive every single second. And here's the hard truth that most beginners never hear until it's already too late. Crypto doesn't fail people. People fail themselves by ignoring security. Every year, billions, yes, billions of dollars disappear forever. Not because blockchains were hacked, not because the technology broke, but because humans clicked the wrong link, trusted the wrong message, believed the wrong promise, or stored their keys in the wrong place. This chapter is here to make sure you never become another statistic. What you learn today can save every dollar you ever earn in crypto. The first and biggest lie beginners believe is simple: my exchange is safe. Exchanges feel comforting. They have clean dashboards, friendly support chats, deposit buttons, and password logins. They look like banks. But behind the scenes, exchanges are the biggest targets in the crypto world. Giant digital vaults filled with millions of dollars, constantly attacked by hackers. History proves the danger. Mt. Gox, Bitfinex, FTX, KuCoin, CoinCheck, each one lost customer funds. Some collapsed entirely. That's why there's one rule every crypto user must tattoo into their mind forever: not your keys, not your coins. If you don't control your private keys, the coins are actually yours. Exchanges are like parking lots, safe for a quick stop, but never where you leave your most valuable assets. This leads to the true foundation of crypto security: private keys. Think of your public key as your home address. Everyone can know it. But your private key, that's the key to your front door. Anyone who gets it instantly owns everything inside. There is no undo button, no support team, no reset password. The blockchain simply obeys whoever holds the key. And that's why your C phrase, the 12 or 24 random words you receive when creating a wallet, is literally your entire digital life compressed into a single sentence. Lose it and you lose everything. Share it and you give away everything. Store it online and you risk everything. Your seed phrase belongs only on paper, in metal backups, inside fireproof containers, and in secure physical locations. It does not belong in screenshots, emails, cloud storage, phone notes, WhatsApp, Telegram, or your laptop. Hackers don't need to steal your wallet. They only need those 12 words. Next, let's break down wallets in a way no one explains clearly. A hot wallet, like MetaMask or Trust Wallet, is connected to the internet. It's fast, convenient, and perfect for beginners. But it's also hackable, malware sensitive, and extremely vulnerable to phishing attacks. A cold wallet, like Ledger or Trezor, is offline. It's the safest place to store your long-term crypto because it's nearly impossible to hack remotely. The perfect formula is simple. Use a hot wallet for daily use and a cold wallet for storage. That one decision alone protects more crypto than almost any other strategy. But now we come to a new threat almost nobody talks about: social engineering. Hackers rarely attack blockchains, they attack people. They don't use coding, they use psychology. They send fake messages like, "Your account is suspended, click here," or "You won our giveaway, claim your prize," or "We're from customer support, verify your wallet." Fake airdrops, fake influencers, fake Telegram admins, fake bots. They use trust as a weapon. They don't steal your crypto. They trick you into handing it over to yourself. The smartest people fall for these traps, not because they're foolish, but because hackers are patient, clever, and manipulative. Your best defense is simple. Never trust messages. Only trust transactions. And then comes the silent killer: malware, keyloggers, and screen recorders. This is the danger no beginner sees coming. Hackers install software that captures every key you type, every screenshot, every clipboard copy, every cursor movement. They can watch your MetaMask screen without you even knowing. Your antivirus won't always catch it. Your computer won't slow down. Everything feels normal until your crypto is gone. That's why the smartest strategy is using a separate device dedicated only to crypto. It could be a cheap phone or a small laptop used exclusively for wallets, exchanges, trading, and security. No social media, no browsing, no downloads. This one habit has saved countless people from losing everything. Then we have rug pulls and fake projects, the dark forest of crypto. This industry attracts brilliant builders, but also predators looking for easy victims. Watch out for guaranteed returns, anonymous founders, overnight tokens, suspicious Telegram groups, and influencers promoting coins they don't even understand. If something promises unbelievable profit with no risk, it's not an opportunity, it's bait. The simplest rule is the truest one. If it sounds like easy money, it's a trap. To strengthen your defenses further, always use multi-factor authentication. Passwords alone are not enough. Use 2FA apps like Authy or Google Authenticator. Use hardware keys like YubiKey. Use biometric locks. Email confirmation. Everything that adds complexity adds safety. But whatever you do, never rely on SMS-based 2FA. SIM cards can be hijacked in minutes. Build every login like you're protecting a digital fortress. Before you make any crypto move, any trade, any send, any connection, run this checklist in your mind. Did I verify the website? Is this the real contract address? Did I double check the receiver's wallet address? Am I clicking from a message? Did someone ask for my seed phrase? Is this offer too good to be true? Is my device secure? Is my cold wallet backed up? If any answer feels even slightly wrong, stop. Crypto rewards patience and punishes rush. But here's the emotional truth behind all of this. Security isn't technical. It's psychological. People get excited, greedy, impatient, distracted. They trust strangers because they want quick results. They fear missing out. They tell themselves it won't happen to me. Yet crypto doesn't forgive mistakes. There are no refunds, no chargebacks, no helplines. You are fully in control, which means you are fully responsible. Crypto forces you to become disciplined, focused, and cautious in a world that constantly steals your attention. Security isn't just about protecting your crypto. It's about protecting the person you are becoming. More aware, more careful, more empowered. Take a moment and really look at how far you've come. From not knowing what a blockchain even is, to understanding wallets, security, mining, psychology, risks, scams, and the entire invisible architecture powering the crypto world. You are no longer a beginner. You are now standing at the doorway of a world most people will enter far too late. And this final chapter is about that world, the one approaching faster than anyone expects. Before we step into the future, I want you to feel one thing deep inside. You are living in the early stages of financial revolution. Your grandchildren will study this era in history books. And you, yes, you, are here at the beginning. Because the biggest shift in human finance is already happening, quietly transforming how money moves, how identity works, how contracts operate, how banks function, how businesses form, how nations compete, and how individuals rise in power. This isn't just a tech wave, it's an economic reset. Just like the internet transformed communication, blockchain is transforming value itself. And the world will not change when the technology arrives. It will change when people finally understand it. That's why you are ahead. But the path forward isn't smooth. A silent war is unfolding. Governments versus decentralization. Crypto shifts power away from institutions and into the hands of individuals. It removes middlemen, exposes corruption, increases transparency, and gives ordinary people financial freedom that cannot be fully controlled. No system gives up power quietly. So expect stricter regulations, tax changes, bans on certain privacy coins, restrictions on DeFi, investigations, political pressure, and the rise of government-issued digital money known as CBDCs. But remember, regulation doesn't kill crypto, it kills weak projects. Strong, transparent, high-utility systems will rise even higher. Governments can't stop blockchain, because blockchain isn't just code. It's an idea, and ideas are bulletproof. Meanwhile, real-world adoption is exploding. Not in charts, but in the real economy. Crypto is entering mainstream industries through global crypto payrolls, tokenized real estate, blockchain identity systems, cross-border settlements, tokenized commodities, AI-integrated smart contracts, fractional ownership of assets, machine-to-machine payments, and even smart cities running on blockchain networks. Imagine buying a home in minutes instead of months, sending money worldwide instantly without fees, voting securely from your phone, owning a fraction of a skyscraper, proving your identity without handing over personal data, or machines paying each other automatically. This isn't sci-fi. It's already happening in small pilots across the world. Soon, people won't say, "I'm using crypto." They'll just use it, without knowing it, just like the internet today. Crypto will become invisible, but absolutely essential. However, not everything will survive this transformation. The crypto market is currently crowded with noise, hype, and thousands of coins that exist only to pump and disappear. But the future belongs to a small group of powerful networks, those with real utility, real users, real scalability, and real-world integration. Bitcoin as a store of value, Ethereum as infrastructure, AI-driven blockchains, real-world asset networks, privacy-preserving systems, next-gen payment networks. Out of thousands of coins today, 99% will vanish, but the survivors will reshape the global economy. And this chapter is preparing you for that reality. But the biggest transformation isn't happening in technology, it's happening inside you. Crypto changes the way you think. Money is not just money, it's psychology. Fear, greed, discipline, patience, confidence, emotional control. Crypto magnifies all of it. When you understand crypto deeply, you begin to understand yourself. You learn to wait. You learn to think long term. You learn not to panic when others do. You learn to manage fear. You learn to stop chasing and start building. Crypto doesn't just build your portfolio. It builds your character. And in a world drowning in distractions, that may be the most valuable thing you can gain. Because the future investor is not the one with the most money, it's the one with the most knowledge. Wealth in crypto belongs to the prepared. The people who learn before others, stay ahead of trends, avoid emotional decisions, understand blockchain fundamentals, protect their assets, and stay consistent for years. After reading all 10 chapters, you have taken a step most people will never take. Even if you start small, even if you move slowly, you are already ahead of millions. The future belongs to people like you. And one day soon, you'll feel the moment the world changes. Crypto will be everywhere. Businesses will use it, governments will regulate it, banks will adopt it, schools will teach it, digital assets will be normal. Blockchain will quietly run the global economy behind the scenes. Most people will say, I wish I had started earlier. But you won't say that. Because you started now, today, not someday, not later, and that decision changes everything. This final chapter isn't an ending, it's ignition. You now understand what crypto really is, why it matters, how to stay safe, how to think long-term, how to avoid scams, how to invest wisely, and where the world is headed. Knowledge is your compass, discipline is your engine, security is your shield, and time is your greatest ally. You are no longer just a viewer or a learner. You are a participant in the next financial era, a future that belongs not to institutions, but to individuals with the courage to evolve, individuals just like you.